You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means we are back once again. It is Friday. It is noon Central. It is 1 p.m. Eastern. It is time for a little vol talk. Yes, it is time for Volatility Views, the premier program for volatility traders. My name, of course, Mark Longo from the TheOptionsInsider.com, as well as from the network upon which you are listening to this. Probably, who knows where you get it at the end of the day. You could just be listening to Vol Views by itself on some bizarre platform for podcasts in Estonia. Whatever floats your boat, however you listen to the show, welcome. We love you. If you do like what you hear, if that platform in Estonia lets you leave a like or a comment or a star, go ahead, throw it our way. Helps new people in Estonia and elsewhere discover the show. And, of course, if you want to discover more content in your lives, let's say, for example, you don't want your broadcast week to end with Volatility Views. You want to come back for a little bit of options oddities afterwards to break down the mad week that was from an unusual activity perspective. Then only one place to go, theoptionsinsider.com/pro, the place to go to learn more about all that fun as we learn more about who's joining us on the old program today. First, let's go out to the dark, the stormy, the ever-tempestuous shores of Maine, where we are joined once again by the rockingest of lobsters, Mr. Andrew GIOVINAZZI from OptionPit.com. Mr. G, welcome back to Volatility Views, sir.
It is a pleasure to be here. I love this show, and one of the great volatility maestros is co-hosting. I'm not going to spoil it, though. I'm not spoiling it.
All right, I guess
it is stormy, but not dark today.
I was going to save him till the very last minute of the show, but I guess since you mentioned him, I guess I'll introduce him now.
He is invoked.
He is invoked. Joining us in the hot seat this week, listeners, he is the once future and now present Dr. VIX, a.k.a. Mr. Russell Rhoads, holding down the fort over there at the KELLEY School of Business, educating the young minds of tomorrow about all things vol. Mr. Rhoads, welcome back to the show, sir.
Always happy to be here. I feel like I was just here. In fact, I this work from home thing, it doesn't, and doing podcasts without the camera, I'm pretty sure I'm wearing exactly what I was wearing 22 hours ago when we were on TWIFO.
You're full of all sorts of overshares this week.
I know. And my garden got a little rain this morning, and now the sun's out. It's awesome.
This is the new post-head trauma Russell Rhoads. He just shares whatever's on his mind. We love it. All right, let's keep on rolling before he takes off some more clothing, listeners. Right on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review, the portion of the show where we look back on the week that was and indeed still is, some about trading and trending and analysis and unusual activity, all sorts of fun perspectives. And coming into the start of the show here, listeners, we had the markets trying to go green. You know, they were green for a bit there earlier this morning. Let's see, how high did we get up? We got up to not quite 44.75 in the S&P. Did we kiss it? Actually, I think we just got a little bit shy of it. And that was on the green side. Now, as the show has started, we have dipped into the red in most of the major indices. The Dow still green, still feeling that diz bump, I suppose. So we're still technically mixed on the day, but intriguing stuff nonetheless. S&P off, closing in on 0.25% now. NASDAQ off about 0.2%, and the Dow up about 0.15% out there. I wouldn't be surprised if that one drifts ever so gently into the red, because we had the run earlier in the session. And now it seems like the turn is in, at least for now. Again, we know these markets wait 5 minutes, and you could have a whole different scenario out there, which makes doing this show in this environment, listeners, so much more challenging. We literally can't prep anything until about 5 minutes before showtime, because you have no idea what you get. And even during the show sometimes, you have no idea. Witness last week, where we were prognosticating in the crystal ball, and the worm turned as we were giving our predictions. By the time we were done with the segment, VIX had moved 0.5 point, and we were off to the races on that kind of VIX upside move, the first leg of it. So it's an interesting time we are all living. It was the old Chinese curse/blessing. May you live in interesting times. We are all doing so today. So with this technically mixed market, we've got VIX at about a 1560 when we kicked off the show. It's up about exactly a point from where we were this time last week. VVIX hanging out exactly at triple digits, 100, and now up about 9 points from last week. And VOLQ right around 19.5, up about 1.5 points from where it was this time last week. Let's go around the horn. Let's go the opposite of the way we came. Let's start with the once and future Dr. VIX. Mr. Dr. VIX, first off, if you have anything else you want to unburden yourself with on the show, have at it. And then B, if there's time left over, what's catching your eye in the vol space, sir?
Well, what's catching my eye, and I've so overshared that, you know, I just got a little notice that my dispensary order is ready. Okay, done sharing. So, you know, you make fun. You've already made fun of me a couple of times, and a couple of the ways you made fun of me, people don't even realize. If you hear Mark say the Options Insider, it's because I was getting the link to the website wrong. And I know that one was directed at me. But also, I get a little ribbing over my fixation on VIX and days of the week. And especially the way that VIX behaves going into weekends and then after weekends. And what has been catching my eye lately, it just seems like, and this is what's going on at this very moment, you see VIX down with the S&P 500 down, which gets everybody all up in arms. Well, it's more likely to happen on a Friday than any other day of the week. And leading from 2000 to 2022, the average VIX change, and I know Mark Sebastian would be grumbling in the background because I'm going to talk about percent changes, but it's just the way you have to do it for what I'm talking about now. On average, VIX would be down 0.67% on a Friday, just on a non-holiday Friday, the two day of the week Friday. Where'd my number go? This year, it's been down on average 1.67% on Fridays. So I'm trying for the life of me to figure out why the Friday impact has been more dramatic in the current market environment. I don't know if people are less concerned about weekend geopolitical risk and more concerned about the economic numbers that we get. So you're not worried about coming in on a Monday morning and having us down 5 or 10%. But remember that a lot of the big dips and a lot of the big market, systemic market risk events have occurred where they're trying to fix things over the weekend, and we come in on a Monday and the world's going to heck. So I think VIX has been giving us a Friday opportunity this year, and we can expand. That's more than you wanted to hear, huh?
No, we like in-depth analysis at the beginning of the show here. Speaking of weekly and kind of one-day performances, I know you were also tweeting recently about the one-day straddles, the old SPX one-day straddle. Everyone's all obsessed with zero DTE, and how recently quite a few of them maybe getting things a little bit overzealous. Is that your takeaway as well, sir? Maybe overpricing some juice?
Well, it's interesting with the first 2 quarters where we pretty much had daily expirations available. The daily expirations underpriced the straddle on a pretty frequent basis in both the NDX and the SPX arena. That flipped starting with 2023, and we're very fortunate to live in Chicago. Sorry, Andrew, and we're very fortunate that we can drop by the CBOE every once in a while and talk to folks. And I've had the opportunity to talk to some of the market makers in the SPX, and they basically, after struggling a bit, they treat the short-dated options and the longer-dated options as 2 completely different accounts, which is not how you would be an SPX market maker in the past. And I think that shift has allowed them to do a better job of slightly overpricing the options, which is what you would want, which is what you would expect. In the last 2 or 3 quarters, that's what we've seen. So we've seen a shift, and I almost feel like it's a shift where the market makers just got better at anticipating, reading the order flow, and hedging themselves properly.
Now, that makes total sense in hindsight. You wouldn't want that 0-day garbage that's blowing up the last hour of the day. You don't want that in the rest of your book. You also like, why is my gamma infinite? What the hell's going on? You breaking everything. So that makes total sense that they silo that off. I like that. I'm sure if I was still out there, I'd probably be doing something similar out there. Mr. Rock Lobster, sir, what are your thoughts on this siloed market making for 0-day contracts and the fact that maybe that leads to some interesting pricing of daily straddles as a result? And then what's catching your eye in the vol space this week, sir?
I have to say, makes total sense to me. I didn't think about, in my mind, I thought that there would, you have some kind of back month inventory. And in the reality is that inventory has there are unit contracts and stuff like that, but it's like when I was a market maker, I used to kind of separate the leaps from like your leap Vegas and stuff like that from any kind of shorter term position, because you were trying to get a sense of, okay, I'm long a lot of Vega, but how much, Vega, let's say, am I short in like a 3-month or 6-month options or something like that. So at Group 1, we used to call it a fat sheet, where you'd separate your the fat, basically meaning you're separating your terms. So you have risk per term. So it would not surprise me at all that those guys figured out a way to deal with that, because they probably, like Russell said, you're sticking all the contracts together, but the gamma theta part of, whatever you have in the weekly is just overwhelms whatever the back month does, unless you have like massive Vega exposure or something, and the market does something goofy. And we've had a couple of Vega pops this year, but nothing. Well, I guess that banking crisis we got sideways for about 3 days or something. So I totally get it that's what they would do, because when you're trading, I was from a professional. Again, I teach my students kind of how to think about this, but you have to separate like your Greek risks you have, and when you have tens and tens of thousands of contracts of open interest in your positions, like minute, secondary, tertiary Greek stuff makes a big difference, because you just have so many contracts. Does the average trader need to know like second order Greeks? Not necessarily. But if you have 10,000 spreads on in the SPX, you kind of have to know how that's going to work, right? So I can see 100% that, the SPX guys have figured it out. And they're not dumb. Like you forget too, SPX. Like, so the groups that have been there have been there at least as long as I've been trading options. So way over 30 years. Some of the SPX guys. So they have data for every day of every SPX curve. In the old days, of course, it was just the monthlies, but then they got the weeklies were added and all that kind of stuff. So they have, unbelievably detailed tick data on SPX, and they're very good at it. That's why all the guys that own those firms fly around in jets or they're retired. So, but when you look at a new product like this, I'm not worried about the SPX liquidity providers either. We'll eventually be worried about the retail that got used to getting fat off of selling, daily options. And we'll see how that plays out down the road. But I thought it was good that Russell did that little bit of investigation. We don't necessarily trade the dailies, although sometimes, but we do a lot of 2-day, 3-day, 4-day, which I think at least currently they've been underpriced if you trade them intraday, because the vols have been like 10, 11, 12%, stuff like that. And intraday, we're still getting like ATR has been about 1% SPX. So you kind of have a shot to get out of stuff pretty easily. It's half a strangle or half a straddle, and then you got basically the whole rest of the position for nothing for 2 or 3 days. So as a trade, that's still been a good trade with the market conditions we've had. So all people in our Delta Strike and stuff, not Delta Strike, but our trading desk, like for understanding how to trade options on a short-term basis. So if you're interested in that, because we don't really sell them, we don't really sell options in that product, because it can get a little squirrely. But anyway, as usual, Russell brings the goods because that's why we love him on the show.
And I'm jumping in with one more little thing that I'm tweeting right now. You guys have caught me at a great moment. One of the other things that I'm investigating the daily options because one of the European exchanges is going to launch their daily options. And they've asked me to look at how the market changed. The average put call ratio for the 10 years leading up to when we launched, when we had everyday expirations, was a little over 1.7. Now it's down to 1.37. And you got to assume that but if we did a put call ratio for only the options that expire today, I'll bet you the put call ratio would be under 1 more often than 9.
Intriguing, sir. Intriguing stuff. Speaking of what's popping off today, let's get out to the VIX future. Before we get there, we got a chat from the live queen. She is the queen of the chat, options queen. She says, I'm enjoying this chat about market making and SPX and how they handle volatility. Yeah, always fun sometimes, the rabbit holes we get into. I think most of us, maybe not Russell, but I think Andrew was. So most of us spent some time in the SPX. A little bit of a different beast now than it was back then. A few more terms to deal with, including some very, very near-dated stuff, but intriguing stuff nonetheless. As we keep on rolling out to the land of the VIX futures, let's see how intriguing things are on the vol surface this week, listeners. And the answer is, kind of a shoulder shrug. The AUG future is doing its death spiral towards the cash now, so that'll all be going the way of the dodo next week. So we're seeing that chasm between the AUG future and the cash going away as expected. It's right around about 1/4 of a point right now. Of course, you jump out to the SEP future, which will be the front future pretty soon. There you're talking about nearly 2 points. So that's where all the juice still remains. Right now, the AUG future up about 0.15, 0.16 on the week. Kind of a rounding error out there. SEP a little bit beefier, which is also interesting. Up a little over 0.5 point, about 0.53 out there. And if you go all the way out on the curve a little bit, you get out to end of Q1, beginning of Q2 next year, that March-April timeframe. You are starting to see a 20 handle back in on the VIX, of 2015 for the March future and a 2065 for the April future. So intriguing stuff. That's a pretty aggressive ramp up we got all the way up to Q1 of next year. Mr. Rhodes, we'll start with you, sir. What are your thoughts on the ever-evolving VIX futures term structure, sir?
The height that we have into 2024, you have all the folks that have been calling for a recession, and they're not giving it up, but they keep pushing it out to maybe next year. So a part of me wonders if you've got folks that want to go ahead and start getting a bit prepared for early 2024 in any sort of big old market surprises that come next year. That's the only thing I can really think about with respect to that, that bump up when you get to January, February, March, April. Of course, we know that December tends to have a bit of a headwind, and December at a premium relative to November right there. That's kind of startling to me as well, because typically we get this far out. Typically, we see December at a discount relative to November because of the holiday effect there. So I'm scratching my head on that one, but maybe maybe it's just higher risk expectations into early next year. Because again, and I'm sort of thinking and talking at the same time, that December contract. It will expire into a calculation of January options, and if people are worried about the markets in early 2024, they're going to be buying January protection. So maybe that's what's ruining what we usually have to point out to dozens of people over time, where the December contract's at a discount relative to November and January.
They're killing our seasonality, Russell. They're taking it away from us. December used to be the best bargain on the board. Now, it can't make sense, though. I mean, January has come in like a lion ever since the start of the pandemic, right? So something crazy and unexpected and just completely bonkers has happened just about every January for the last few years. So it's hard to fault them for pricing in a little bit of extra surprise juice. Yeah, I always say, I just said it yesterday on one of our shows, that, your seasonal discounts are always to be found in August and in December, that nice little bit of seasonality from the vol perspective. And here they are making a liar of me right now. I don't like that. Mr. Rock Lobster, chime in, sir. See if you can dissuade the markets. I don't like when they make a liar of me, sir.
Oh, about the seasonality stuff? I was trying to figure out, what do you want me to chime in exactly on? The curve now?
It would be the curve. That's what we're talking about. But then you got to flow with the conversation. I know it's your first time on the show, but, we kind of morphed. I expect this from post-head trauma Russell.
I was listening. I'm like, I couldn't quite pick up. I tell you, my COVID brain. I got the memory of a gnat right now.
So I got COVID brain on one hand. I got head trauma guy on the other. I got to slow things down the show. I think.
I swear to gosh, you're gonna have to go to remedial radio school at this point with what you got going on here. If I'm just looking at term structure right now, you're saying like January seasonality. Dude, I don't know.
Forget the seasonality. It is obviously throwing you for a loop. Just look at the term structure. What are your thoughts on what you're seeing, sir?
Okay, that makes it easier for me right now because I'm meant to have a total mess. So what I say, by the way we measure vol, there, at least up until like kind of later today, there was some stress in the curve. So how I look at VIX is I just pick basically I have a counter, and the counter starts every VIX expiration, for every month. And what I like to do is we have kind of what we had an average forward vol, or an average sort of VIX curve slope that we figured out based on when we're in contango, like what's roughly the average difference in the forward vols on the curve. So you have kind of like a rough idea of how much premium should be in VIX when it's 12. And then once you have that number, do like a little interpolation, whatever. And okay, every time. And so how much juice should be in the future on average, like all the samples we've had over the last, 20 years. And you get a rough idea of what the curve should be under normal circumstances. Now, any given day, things could be all, going sideways. But so anytime with where we are in the cycle, so where we are to August expiration and where we are relative to September expiration, anytime VIX is sort of out of position relative to the futures, that always is like my spidey senses go up a little bit. So right now, the way I look at VIX, the cash is a little close to the future. which means that the market is pricing volatility a little higher than it normally would for this time in the cycle in a regular contango environment. So that means short-term vol is a little more bid, even though the market expectation is for like a normal contango when we're in contango. You don't expect much to happen in general. Like we're moving, but when you're in contango, basically the assumption is vol is going to be a little lower the next day. So when I look at that, like we had that this week, ever since the Fitch thing came out, and I'm going to write about this in our newsletter this weekend, it kind of screwed everything up. All of a sudden, we got the front term kick. All the short term, the 9-day VIX went to like in the 15s, and everything basically, the apple cart was definitely upset. Now, I don't know how long it will last, but all I know is as long as it's still there and traders want to pay that kind of vol for 9-day options, right, or 9-day average options, there's still there's a little agita going on in the market, even though we're only down, 2% from the highs, recent highs, 2.5%, something like that. So and I think that's kind of what we got right now. So we have a contango curve, but it's not a happy curve. It's a slight, there's a little agita in the curve. And there we go. That's what I'm seeing.
I love it. You sound like my grandmother at the agita.
Yeah.
I got agita after eating. Yes, all the Italian slang making its way into the show today. No, it also makes it into the show every week, listeners. It's like clockwork. It's ye old VIX options. And the ADV ticking up a bit since our last show. We have seen a few robust sessions out there. So it's back up to 773, which again, kind of making a liar of me. I'm always talking about how August and December kind of seasonally quiet, usually relatively low VIX levels, and also relatively low volume for VIX. And here we are threatening 800K heading into mid-August. So things are once again topsy-turvy out there, listeners. Today, though, seeming fairly reasonable, 329,000 contracts on the tape, so not blowing the doors off today. Will we make that ADV today? Who knows? Right now, not looking good, but then again, a couple big trades come in, a couple 100,000 lot rolls, and next thing you know, we're threatening 1 million contracts out there. Let's break down a top 10, then we'll get to the segment I know all of you are here for, listeners. The sweetest theme music on the network. But before we get there, a top 10 positions, a little bit of evolution out there. How long have I been saying, listeners, on the show? There's only 2 puts to be found anywhere in the top 10. We keep eroding. This past week, not so much. Maybe you would be forgiven for thinking this wouldn't be the week that a bunch of puts would make their way into the top 10, but it did happen. Now we are 7-3, slowly edging up there on the put count in terms of calls versus puts out there. It cost you 215,000 contracts to break into the top 10 in VIX, which is pretty dense. Usually you see it around $1.60, $1.70, especially this time of year. So cost you nearly 220,000 to break into the top 10 in VIX. That shows you some people are slinging some paper. That gets you all the way to the October 20s. Interesting. If you had October 20s on your bingo card, hit me up, because I did not. Number 9, 224,000 of the August 15 puts, our first of 3 puts. Number 8, right behind it, they're all bunched together, listeners. 232,000 of the SEP 13 puts. Then we get back to our call palooza for a little bit. Number 7, 234,000 of the AUG 21s. Number 6, 244,000 of the AUG 22s. Number 5, 254,000 of the NOV 47 halves. We were talking about these on the show last week. This strike just leaps out to me for so many reasons. The month, the strike, it has the air of weirdness to it, which draws my eye. Number 4, 268,000 of the AUG 60s. They used to be my favorite. They had now been usurped, I think, by the NOV 47 halves. Number 3, 287,000 of the AUG 20 calls. Number 2, all the way up at number 2, we find our final put in the top 10. So making some noise this week, it's 297,000 of the SEP 15 puts. Are you in on a little bit of VIX downside right now, listeners? I'm curious. Hit us up. Let us know. In the number 1 spot, you know what it is. It's been hanging out there for a while. 334,000. It's looking a little bit more robust than it did last week. We have the SEP 60s. Again, part of that 1x3 that went up a while ago. So far, not threatening the 60s. But again, you know how these trades work. You don't need to get there for these trades to make some cash. Speaking of getting there, listeners, we have gotten to that point in the show. It is time for Russell's Weekly Rundown.
Now, Russell's Weekly Rundown.
Yep, it's so nice we have to hear it twice. One more time, listeners.
Now, Russell's Weekly Rundown.
I still laugh every time I hear that. How long we've been playing that, Mr. Rhodes?
Oh, my goodness gracious. I think
best theme song on the radio.
It is.
Oh, yeah.
It's pretty darn good.
I'm sending a kid to college next week, and I think she was 4 when she heard that the first time and said, and back then she wasn't very verbal, so she just said, no.
Exactly.
Now she just says, I don't want to be associated with that.
Now she just leaves the room in disgust. Yes, which is the right response.
Yeah. So I like to be associated with it. So, all right, a lot of the activity is kind of bearish relative to VIX, which, by the way, before I get into the weeklies, as you were going through the different most active options, and you mentioned 3 puts, the 3 puts on the most active options, I can see if the majority traded on the offer or on the bid. And for all 3 of those puts, it was more trading on the offer than the bid. So people were net buying those puts as I think as VIX went up a bit with the anticipation it's going to come back down. So sometimes it helps to know the direction as well.
You are putting that Bloomberg terminal through its paces, sir. Wow.
I am, man. If I'm going to, if this thing's going to cost me like, I don't know, what does it cost? Like $10-15 a day? I'm sure as hell going to use it a lot. So, all right. Monday, we had somebody say, and a good portion of the trading was in the August 30th options. There were some August 9th option trades earlier in the week, but those are off the board, so I kind of skipped over those. Gathering weekly trades on the Friday before expiration, it's a little bit lighter than it normally is, and that's just because people are more, if you're going to do something short-term, you've got a short-term contract right in your face. So let's see, Monday, VIX was up around 1681. Somebody came in and their line in the sand is 17. They sold 200 of the August 30th 17 calls for $1.84 and bought the same number of the 27 calls for 54 cents. Took in $1.30. They make a partial profit if we're between 17 and 18.30 at expiration, and they get to keep the whole credit if we're under 17. Big loss if we go up above 27. I have a funny feeling they probably would bail out of this trade very quickly if we start breaking into the low to mid 20s. Tuesday, nice round number here. Somebody sold 199 of the August 30th, 14 and a half calls. Very bearish trade here because VIX was at 17 and a quarter. They took in 375 for those, which is, about a point of time value? Yeah. And they bought the 17 calls and they paid $2.20 for those, a net credit of $1.55. The only thing I don't like about that trade, and I don't have the futures price because the futures are so illiquid at that time, but just looking at spot VIX, you got to assume the future was kind of close to 17. When I'm thinking about doing a spread that involves buying and selling something, I'm typically not going to buy the at-the-money option because those are the ones that have the most time value to them. So conceptually, I like the idea of using a call spread when VIX was higher this past week with the anticipation it's going to move down. Not particularly on board with the strikes that they did there. You probably could have sold the 17s and bought something out of the money and gotten the same sort of credit. Wednesday in 2 lots. This is the last August 30th trade, I swear. Somebody sold the August 30th 18 puts for $2.14, $2.15. They did it in 2 lots. And then they bought 400 of the August 30th 16 puts for 79 cents. They took in a credit of about $1.35. They did this when VIX was back down below 1566. So this is a bullish trade where they sold an out of the money put with the anticipation of VIX moving higher. Spot VIX, I don't like this trade either. And the reason I don't like this trade is if you subtract $2.15 from 18, you get $15.85. So you're selling an option that actually has negative time value when you look at the spot index versus the future. I know they're priced off the future, but they do settle into the index, and I really think you need to be taking the index into account when you do these sorts of trades. And on Thursday, we're going to something a little bit nearer term. The August 23rd options, somebody sold the 14.5 calls, the August 23rd ones for $1.77, bought the 18 calls for 57 cents. They took in $1.20. This was when spot VIX was at 1470. So, they're selling the at the money option basically here again, which is, something that I would do. I kind of put those trades side by side for that purpose. And then finally, today, there was only one weekly trade above 10 contracts when I was just as the program was starting and I was gathering all these. Somebody did buy 175 of the September 13th VIX 17 puts. And they paid $1.59 for those. Spot was at 16.08 at the time, so they've got 50 cents of time value to overcome to make money on that trade. But in anticipation that VIX will be back down in the low teens by the second week in September. So there.
Well done, sir. Getting all the value out of that Bloomberg term. But by the way, Mr. Rocklops, if you have any questions about trades going up, just hit up Russell because he's more than happy to put his new Bloomberg to use for your benefit.
So now he's probably going to charge me per peck.
He might.
He's like, hey, this thing's costing me $25 a day. And if I got to hit the keyboard, man, it's going to cost you $1 every time. It's just going to start up a Venmo account.
And it's $5 per data download.
There you go. We are all
right into my Venmo.
We're all starting up the amortized Russell's.
I'm joking about that before the Bloomberg people come after me.
Amortized Russell's Bloomberg fund that's going up here on the show. By the way, Mr. Rhodes, I see your Photoshop skills have not been lost. I do like what you tweeted out there, sir. That was pretty an apt description, I think, of today's show. So check out Russell's graphic or his image as we keep on rolling. Speaking of which, Mr. Rhodes, I was just saying, maybe if we wait 5 minutes, you might see a little bit more juice pop in. In the time it took you to lay down that Russell's weekly rundown, we've seen 100,000 more contracts go up in VIX. So some paper going in. It was 329 when you started. It's at 433,000 now. So it looks like somebody loving themselves a little bit of the old SEP 24 is expiring on the 20th. They bought 100,642 of them for about 88 cents. Now there's about 120,000 open on this strike, so they could be closing, but it just went up a few minutes ago. So that's our big dog for the day today. Right behind it, it's actually a distant number 2, is 33,000 of the AUG 22s. Number 3, 24,000 of the AUG 15 puts. Number 4, 17,000 of the SEP 28s. And rounding out the top 5 today on what was a pretty light day, getting a little bit more active now, about 17,000 of the AUG 25s. Yesterday, the banger day of the week, listeners, 961,000 total contracts. Remember we were saying on the option block, seems like we might be able to threaten 1 million. We got close but no cigar. But still an impressive day. 153,000 was the big dog of the AUG 15 puts. So folks, diving into those 15 puts out there yesterday, back and forth. Number 2, 92,000 of the AUG 14 puts. Number 3, 83,000 of the SEP 23s. Number 4, 41,000 of the AUG 16 puts. And rounding out the top 5 yesterday, 40,000 of the AUG 14 half puts. Getting to Wednesday, no slouch itself, 868,000 contracts on the tape, even though there wasn't one massive print like we saw on Thursday or even today. The big dog on Wednesday, 61,000 of the AUG 14 puts, followed by number 2, 55,000 of the AUG 15 puts. Number 3, 34,000 of the SEP 25s. Number 4, 33,000 of the AUG 16 puts. And rounding out the top 5 on a pretty active Wednesday, 31,000 of the SEP 65s. So we're back to those funky strikes, listeners. Tuesday, giving it the old college try to beat Thursday, but not quite, falling a little bit short. 950,000 contracts on the tape. So 2 days this week threatening 1 million, listeners, hence the ADV ticking back up, putting the lie to me for the seasonality of August here. The big dog on Tuesday, 74,000 of the AUG 15 puts, followed by number 2, 67,000 of the AUG 16 puts. Number 3, 52,000 of the AUG 18 calls. Number 4, 38,000 of the AUG 17s, and rounding out the top 5, 35,000 of the AUG 17 puts. Monday, the laggard of the bunch, 400K exactly. You don't see that too often. on the tape. The big dog, such as it was, about 23,000 of the AUG 16 puts, followed by number 2, 21,000 of the AUG 22s. Number 3, 17,000 of the AUG 25s. Number 4, 17,000 as well of the AUG 24s. And rounding out the top 5 on a light day, 16,000 of the AUG 17 calls. Mr. Rock Lobster, while you're not busy putting Russell's new Bloomberg to work, sir, anything catching your eye either in his weekly summary that he just broke down for us or in the rest of the paper that I just broke down, sir?
I mean, paper-wise, I haven't seen a whole lot that was really getting me too excited, although there is some pricing that is getting me excited. So right now you can buy the 16 put in September in VIX for $1. And there was there's a little bit more volume in the 18s. There's 100,000 of the September 24s going up. Now, again, not knowing exactly what that paper is, but 100,000 calls buying the 24 strike, I don't know what they're thinking. However, if I'm putting on my hat and I'm saying, okay, what is a tasty strangle in VIX? So you could buy the 1624 strangle for less than $2. So basically, I think we trade a low of 13 pre-Fitch. And the 16 puts got to 225, 240, something like that. So the pricing does look good for this strangle. So, we were looking at this, and as much as the market doesn't really want to sell off, I don't think the option pricing I think is pretty favorable in VIX right now, considering we're kind of in the middle of the second quartile of volatility. So you're not being charged a ton. I don't know if I would go after the 24-16 strangle, but just looking at the volume, I thought that was kind of interesting on why somebody would be loading up on 100,000 of the 24s in September. So I had to look a little harder. Maybe it's a roll or something, but it does appear to be opening paper. So that's what I would say from a volume point of view. But the September, I think, is priced very inexpensively currently.
There you go. You don't just call him the Rock Lobster. He's now the Strangler. He hasn't met a vol strangle he doesn't love these days.
I like that.
Speaking of products that the once and future Dr. VIX loves, maybe a little bit less so now, SVIX. He was all in on SVIX, kids, college fund, the house fund. He was all in, listeners, all the chips on SVIX. 27.90, so it can come back down about half a point from our show last week. A kind of anemic paper, only about 500 contracts on the tape this week, so not much going on. The ADV ticking in the wrong direction as well, down about 100 to 2,300. So not much going on in the world of SVIX. I guess folks don't like it when it's going down. They only want it when it's going up. But Mr. Rhodes, you were our resident lover of all things SVIX. Seems like you've cooled a little bit on it now, sir. What's your thoughts?
I'm worried about the equity markets. I went on a rant about that yesterday. And I'm not gonna repeat every single thing about it, but I've gone from, I was kind of bullish coming into the year, as long as NASDAQ was leading us up. I was like, hey, this is cool. And then when NASDAQ stopped leading us up anymore, I got neutral. And this fall kind of, maybe I'm so old and been around for so many terrible August, September, Octobers that I just am automatically geared to start thinking about being short this time of year. But being short, and I am short S&P futures, and I own some puts on the NASDAQ, but I still have, I have 20% of my normal SVIX position, but I have calls written against all of it. So it is possible they could get called away, but I was told by Mr. Jim Bittman to never refer to a cover call as a hedge, but in reality, if you do a covered call that's got some time value, but it's 2 or 3 points in the money, that is a hedge, and that's what I've got right now with SVIX. I am short some of the August 27th and some of the August 28th against what I own. So I did that when we were a little above 30, just so I own it, but I'm concerned about it right now. And what's really funny about that is I taught VIX in one of the I taught it in both the derivatives classes. I taught it in Indiana this summer. And at the very end, I did talk about the ETPs and all this other kind of stuff. And there were students in the class that bought SVIX after the lecture. And then I started talking about how I was bearish on the market. And they were like, well, should we sell our SVIX? And my first thought was, I never told you to buy it. I just told you why I like it. And my second response was, well, I'm selling calls against mine. So, maybe my derivatives courses at Indiana are responsible for all this call volume, that 500 contracts or so this week.
That size paper.
Look at the kids
coming to class with funded trading accounts now. I gotta like that.
Oh, yeah.
That's a bit of a departure from my day, sir. I had to scramble together a few $100 to open a stock account, and I was all excited. I thought I was crazy. Now they're slinging SVIX.
They are.
We're kind of coming up against this. I'm going to condense a few of these together because there's not a ton going on in all of them. Of course, we just hit SVIX. We got UVIX literally unched on the day right now at a 4 handle. Doing a little bit more paper today, 8,300. So go figure. These things kind of rally to get a little bit more juice in them. Where people want them to actually start eroding again, then they get a little bit more paper because the ADV is now 11,000 contracts in UVIX, up about 2,500 from this time last week, and threatening that again today. So these things get a little bit juicier. Pokes come in to fade them. That's how it works. UVXY, 17.5, up about a quarter from last week. 115,000 contracts on the tape there as well. Of course, all of these got much higher over the course of the last week since our last show. So that's when people start to flock into these things. They get their fade on again. And again, today, 115,000. The ADV is 109,000. That's up 23,000 contracts from this time last week. So go figure. Folks like it when their vol products get a little bit juicier, especially when they come in and fade them. And of course, VXX 2440 up about 0.4 of a point. Same deal. ADV ticking up about 4,000 contracts to 85,000 contracts a day. And today, 68,000 already. So looking like on pace to blow past that again. So get a little bit of an injection of juice back into these products and go figure. They start trading again. Mr. Rock Lobster, sir, anything catching your eye in the realm of SVIX or UVIX or UVXY or VXX, sir? A 4-parter.
Oh. And this is one where I actually have to follow the narrative and stuff like that. Yes, maybe it is Russell is single-handedly bringing SVIX back to life. Again, pretty skinny paper in there, pretty skinny markets. If there was one product I'd like to make markets in, I think SVIX would be one. I haven't noticed a lot of paper. However, a day like today, market down, SVIX up. So there's been a little bit of future compression. So I think this is like for people that want to have, if they can't see the VIX index or they don't have access to VIX futures, just watching SVIX go up or VXX go up or down is kind of a useful product for that. I worked out of a strangle in SVXY. That's been kind of fun to trade. I do like that is a pretty fun option product, 30 days and in, similar to what Russell has in SVIX. But it's geared a half. So it trades a little differently, very low realized vol. But fun. And I also noticed some love from Twitter, like Bill Luby for SVIB or something like that. It's one of the midterm.
I think it's Z.
ZVIB, right?
Or is it ZIVB? ZIVB. That's the ZIVB. Midterm one.
Yeah, and that's a midterm shorty. Again, these are all interesting products. These, buyer beware, of course, but similar to the idea Russell has and the SVIX, I think, and I think they trade well. I would caution anybody, Armageddon, these products did go to zero. They're claiming they will do a better job this time, so you always have to be mindful of that. Also, the AUM is not near what it was, which basically overwhelmed, I think, the VIX futures complex for a couple of days as the guys running those funds, I believe, got squeezed out. But I think Russell knows more on that. So while it's a totally cool product and they're fun to trade, I just, always caution people that the drawdowns, I personally like trading them when they draw down and then looking for the vol pop back up. So I don't start looking at them until we're in like zone 4 while trading 24 vol. And then I get kind of excited, as excited as I can become about an option product, and kind of trade that move back in the other direction. But yeah, I volume wise still a little light on the volume. But they are tradable. I don't trade more than 10 contracts in them personally, just because a 10 lot, they lean all over you. It feels like. So, and I have been doing a little more VXX. It is back to becoming reliably crappy, and the liquidity's improved. So I would just say overall the liquidity's gone up a little notch in these things from probably 6-7 months ago.
Mr. Rhodes, really quickly, anything to add on the rest of those ETPs before we head into the crystal ball, sir?
Just ZIVB, which it doesn't trade some days. It's just not particularly liquid. But somebody was able to buy like over 250,000 shares earlier this week in a single day. So if you want that sort of short, if you're institutional and you want that sort of short exposure, even though it doesn't look like it, if you're thinking about a longer term buy and hold, that fund is actually, there's some liquidity somewhere. I'm not 100% sure where it came from. I'm in a vol group where we talk about these things and nobody really, it's kind of a head scratcher. But even though it's only traded like 27 today, it did do a couple 100,000 contracts earlier this week. And apparently whoever bought them was happy enough with the price. So.
And hopefully we're happy with our crystal ball predictions, listeners, because it's that time of the show.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball, the portion of the show where we attempt to wrestle with what the vol gods hold in store. And man, do we have some crazy cakes action immediately after our predictions were in on the crystal ball last week. It was myself, it was the greasiest of meatballs, and it was Steve from IB. And the second with the ink was dry, the proverbial ink on the paper, the VIX just already shot up half a point, and pretty soon we were hanging out in around the 15s when we made our prognostication. It was already up to a 17 handle in the span of a couple of minutes. We were looking like we were blown out of the water. Of course, as I said, even then, patience is a virtue in this game. You got to wait a little bit. And now that we have waited a full week, VIX has come back to our range right now, listeners. VIX hanging out a little bit north of the 15.5 level, actually 1560 right now. So I was looking better earlier. I was at a 15.05. The meatball's looking pretty good as well at a 15.25. But our guest, Steve Sosnick, was at a 15.75. And he's not quite there. He's 0.15 away. I don't know. Maybe we'll wait and see by the end of the segment. I'll give him a temporary, because he is a guest. We can make a little bit of an adjustment for a guest. I'll give him a temporary crystal ball win. A temporary bullseye. We'll see if he moves within our 10th of a point margin of victory. But right now, he's the closest. Looking at some of the... Nichols, what the... You winning again. Exact bullseye, 1560. You just won a couple of weeks ago. Are you trying to take the crown from Options Queen? My goodness. Well done to you, sir. Tip the cap. You get the prize. Option got, man, you were close. No joy for Queen. Frank, there's a bunch of others here. I know our producers will go through. They just like to surface the ones that are closest. Man, Nichols, a couple of weeks in a row, or I think you got a couple of weeks ago, so within a month, you got 2 back-to-back. So I tip my cap to you, Nichols. You know the deal. Our producers will reach out to you. Fabulous prizes await. So a long way around to saying no winner, but our guest was pretty darn close. So Mr. Rhodes, as our guest this week, I'll let you choose. You want to go first or do you want to go last?
I'll go first.
All right, have at it.
And I think VIX going to keep on working its way higher. So I'm going to go with a 1565.
15.
So it's going to hold up and, probably just goof around within this area like it did over the past week.
Kind of unched on the week. Interesting.
Yeah.
Okay.
We're kind of range bound on that one. So I'm going to, I honestly think if I had just been guessing wherever we happen to be when it was crystal ball time, I probably would have a little bit better track record than I do have in this.
That is the name of the game. You got to guess it now, not for the end of the
Washington
day.
Generals of the crystal ball right here.
Some might say, going back to yesterday, this market balanced precariously on the edge of a knife. I'm just throwing that out there. I don't know who would say such a thing, but I think that person would be pretty prescient if that were indeed the case. All right, tell you what, Mr. Rock Lobster, I'll be charitable. I'll let you go last. I don't know why. I'm just feeling nice today. So I will go next. I've been fading for a while. It's worked out all right for me, but I'm not sure if I'm feeling the fade over the course of this next week. I could see a 13 handle between now and then we rally back up. I'm going to say a little bit more juice on the old docket. I'm going to say, how high? Okay, I'm going to say 1635. Bam. I said it. It's locked in. It is irrevocable now, sir. Mr. Rock Lobster, I have bought you time. I have given you the proper answer to crib from. What do you want to do for next week?
I do like that. I think we will see a little dip next week early, but I am going to go with the signal that my tried and true vol prognosticator is giving me, and it is giving me It's giving me the agita signal. So I'm not going to scum you by a dime. Okay. What did you say? 1635?
I did. Yes.
All right. I'm going to say 1675.
There you go. All that freedom. 0.4 of a point there. Look at him.
Yeah.
You should.
You've got room to win, and you cannot accuse me of scummery.
That should be the name of your new newsletter. I would subscribe to the Agita newsletter. All of us Italians would get the flow of that one. So there's your market for this week, listeners. 1565. Russell on the downside, a rare inversion for him. Me playing the Goldilocks actually 1635, and the Rock Lobster taking the upside catbird seat this week at 1675. All right, the music means we are done for this week. Looking really quickly, we got a bunch of 15 handles in the chat. One options Queens at a 1610. Frank going up there 16.5, so he's kind of getting up near we were. Keep those coming in. Nichols, you're banned. You're too good. I'm just kidding. You can play again, Nichols. As can all of you at home. If you're listening today, Friday, when the show comes out, hit us up at Options on most social media accounts. Questions at theoptionsinsider.com. Just write in, hey, crystal ball pick for vol views and give us your number. And if you're within 1/10 of a point, fabulous prizes can be yours as well. But unfortunately, that music means we've come to the end, at least for our on-demand portion. If you're on the pro side, stay tuned. We'll be back in a little bit with all the madness of options oddities. You like that Capri stuff? We got more of that fun in store for you. If you want to check that out, of course, you're not on the pro yet, theoptionsinsider.com/pro. The place to go. And Mr. Rhodes, if folks want to give you more fun nuggets to put your Bloomberg terminal to work, where should they go? What should they do?
I'm on the Twitter. I've been on the Twitter the Xer or what? I don't know. God, I've been on X. That's something we'd say back in high school, and then our parents would turn us into the guidance counselor. So I'm on Twitter. And it's just my full name, Russell Rhodes. If you follow the Option Insider on Twitter, you probably could just go through their stream and find how to get hold of me. I've got a Substack. I don't know if I'm going to rename that or not. I'm still kind of a work in progress toward what I'm going to settle on. But right now, every Friday I do a market review. Every Saturday I do a market review, and every Sunday I do a market preview. And then if something fun happens during the week, I might write that up as well. And that is 100% free and will always be free. It's just my full name, .substack.com.
If you want more of Russell's delicious oversharing, follow him on Twitter or on Substack. You'll get all sorts of pearls throughout the week there, listeners, at Russell Rhoads on the old X. I refuse to call it X. That's ridiculous. And then he's also active on the old X, mostly retweeting us. Find him at Option Vol. Mr. I almost called him Mr. Rhoads. Mr. Rock Lobster, sir. Where should folks go if they want more of your good goodies?
Yes, I retweet this show because I figure all my analysis and stuff I save for my paying students. So no more free stuff for the hoi polloi. But I do have a newsletter. You go to optionbit.com and subscribe for. We do put out a free volatility and trade newsletter every day. It is extremely well read, so I'm pretty proud of that. I believe it's called Pit Stop if you go to Option Pit. So you got 888-TRADE-01. Talk to our customer care team if you want any of my products. They've been having a splendid year. So go check it on out or go to Weekly Profit Cycles at Money Map Press if you want to trade SPY and VIX, learn the technique. And there you go. That's where all the good goodies exist.
There you go. Check them out for all the good goodies. Unfortunately, like I said, that's going to do it for the on-demand good goodies this week. Back again in a little bit for Options Oddities for all you pro folks. Back again on Monday for everybody with the old OB all the way through to next Friday. Another episode of Volatility Views. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.